I made over $3,200 with this simple candle range theory strategy that I actually baked by myself. And in this video, you're going to see the exact footprint to actually master this trading strategy and obviously how I actually got to it. And before we dive straight in, just let me tell you that down below, you've got a nice discount coupon so you can get Forex online for a cheaper price. So let's start off with the basics. We are on the euro against the dollar, and we're going to be using the 4-hour candles and the 1 to 5 minute candles. But the 1 to 5 minute candles aren't so important because we're not going to be using the actual candles or price action. For the actual confirmations, we're going to be using the psychological levels that I'll introduce you in a minute. Let's start off with our 4-hour candle. This 4-hour candle closes at 10 a.m. London time. Okay, so the first 4-hour candle that closes when the London Open happens, this is a candle that we are going to take as our candle range. Okay, so we've got our 4-hour candle nicely set, just closed. Now we're going to go to a lower time frame to actually look for confirmations. But first, let me introduce you what confirmations we actually need to look for. So as we know, in a lower time frame, 4-hour candle like this is going to look something like this in the 5-minute chart, where we've got the price simply going up and down, up and down, up and down. But obviously in this 4-hour candle, there's been more bullish than bearish. So basically, first thing that we want to do is actually buy, and obviously this goes against the original candle range, because normally what we expect is the price to break above here or below here and return. So if the price goes above, we expect it to return, but we are going to use these setups as well. So let me explain. When we go back to a lower time frame, we're going to have several round numbers. Okay, every 10 pips, so the double zeros on the euro against the dollar, we are going to have our round numbers marked out. And by doing this, we can get a better confirmation because we don't have to rely on price action or candlestick patterns to get these actual confirmations, because we're just going to rely on the actual price. And the actual price for me is who rules. So now we got this clear, we're going to use 3 different types of setups because there's different situations that can happen. So first of all, we must confirm that in the 5-minute or 10 or 1-minute time frame, basically, we have the same trend that we've got in the 4-hour candle. So 4-hour candle is bullish, it's going up. We've got that, okay. But now we've got to confirm that in the 5-minute or the 1-minute, we have basically got the same trend that we've got in the 4-hour candle to actually use one of the setups that I'm going to explain now. So how do we actually know when we're in an uptrend with the psychological levels? Basically, when we touch 1, 2, and 3 levels, okay, 3 in a row, we've got an uptrend. If we have 3 in a downtrend, then we are obviously in a downtrend. This is the way how I confirmate the trend in the 5 and the 1-minute time frame. So now we got this clear. Basically, what we're going to expect are 3 scenarios. The price either breaks above here and the price returns 3 psychological levels down. In this case, it would be 1, 2, 3. So the price goes above here, goes 1, 2, 3. I are in a downtrend, and it's a confirmation that it's taken the liquidity of the top of this candle and it can possibly come down here. Second scenario, that the price doesn't break above here and it comes straight down, okay? But literally straight down with having any type of retracement, and it breaks down here. What can we expect? A retracement above. If it retraces 1, 2, 3, then we've got an uptrend confirmation, and we could be seeking to take this liquidity above here because it hasn't taken it. And the third scenario is that we actually are still in this uptrend, but in the 5 or 1-minute chart with the round numbers, we are actually in a downtrend. So let's say prices come here. Okay, this is the last confirmed round number, and basically the price is going like this and it comes down here. So it's 1, 2, 3, but it hasn't broken basically this high. So we're still interested in to reach this high. So what we can do now, if the price after coming down here and confirming the downtrend breaks up again, then we can enter a buy, because basically we're going to aim for this here, and obviously we're expecting price to go above and beyond. So basically, these are the 3 types of setups. Obviously, I'll explain them right in the chart in a minute, so you can understand them even better. So now we come to the charts, 4-hour chart. Obviously, what we've got to do is have 2 charts, basically, because we want to keep the 4-hour chart always on our screen, but obviously we want to have as well our entry chart. So basically, we're going to come here to layouts, and we're going to split it into 2. So now we've got the 5-minute and the 4-hour. So now, as you can see, I've got my psychological levels marked out here, and these we can find them in indicators, in adaptive and psychological levels. And now obviously we just need to come to settings. By default it will come here at 5, and we're just going to set it to 1. So basically we can see that every 10 pips we have a psychological level. So now we got this ready, obviously what we got need to do is come to the London Open. So we are right now at the London Open just by coming to go to London Open, and now we want to wait for our 4-hour candle here to finish. So obviously we're going to go 1 forward, and there you can see our 4-hour candle is completely closed. So now basically we have this high above here, we have this low down here, and we're expecting for the price to either break above, break below, or give us a retracement and break out this zone here. So now we got this clear. Basically on the 5-minute chart we're going to do exactly what I said before. First of all, we can see that the price isn't aligned with the actual trend of the candle. Okay, in the 4-hour candle it's bullish and it's in an uptrend, but in the 5-minute chart we can see that's got 1, 2, 3. So basically we are in a downtrend in the micro time frame, but in the higher time frame we are in an uptrend. So basically we are going to seek now directly for a breakout of this level here to actually enter a trade. So by just going to wait for it to go a bit below. If it does, perfect. What do we do now? Basically we are shifting our entry lower, because before we are entering above here, basically because it breaks our trend again and it goes above. But now how it's touched this psychological level, when obviously we are going to enter here. So obviously we've got a bit more range to get a bit more profit. And if it continues straight down and breaks the low of this candle, then obviously we are going to seek for the buys right at the bottom. So let's see what the price does. And there we go, price has touched this level here. So 1, 2, 3, perfect. Then we've got our entry, so we're going to enter a buy just here. So let's just add our stop limit just up here, because we're always going to be using stop, because price can move so fast that it can leave us out without having chance of actually getting in. So the stop loss initially is going to go below. So basically the stop loss is going to go where the trend would actually break again. So obviously it invalidates our trade, and basically our take profit initially is going to come just right up here. So in this case it's perfect because it actually comes to the high of the 4-hour candle, so it matches perfectly. So we can set a 1% risk here, and off we go. Perfect. There we've hit a nice take profit, and we can do exactly the same on the next day. So we go to London Open, and there we go. 8 o'clock in the morning, sat down with our coffee, and what we need to do now is wait for our 4-hour candle to close. So basically go 1 forward, and then we've got our candle close. So now we're going to just move this up here and move this just here. So basically we're going to expect the exact same what we did before. So now we can see that our micro time frame is aligned with our macro time frame. So obviously if the price comes above, we could look for some sells. So let's see how it performs, and as you can see it's just about to break down, but it hasn't, and it's just about to break this level here. It actually has broken it out for a few ticks, so we can actually say that it has broke and took the liquidity of this candle here. Obviously this can depend on the broker that you're trading on, but at least here it's taken the high out just by 1 tick, but it's taken it out. So we've got actually a confirmation that it took the liquidity, and if it retraces, now we would like to look for the sell. So basically what we're going to do here is wait for the price to break this level just here, in case it doesn't go any higher. If it goes up to here, we'll go 1, 2, 3, and we'll be entering here. But just now, this is the last round number, so we're going to be looking for the breakout down here below. So let's see what the price does. It comes down, okay, and okay, it breaks the level down below, so we'll be entering a sell position just there. So let's place the order and let's see how it plays out. The good thing as well that in Forex Online we can just come here and go to order close, boom, perfect. And we've got a nice take profit down to the downtrend. It's taking out the low of this 4 hour candle, so spot on. So obviously for the next example, let's go back to the London Open and let's close our 4 hour candle. Then we've got it closed, perfect. Now just basically we need to turn this down here and move this one down here. Okay, so now we've got our level set. Basically we're going to come back to our 5-minute time frame and now just wait for the magic to happen. As you can see in the 5-minute time frame, we are aligned the macro with the micro time frame. So now we just need to wait to see what happens. Perfect, it's taking out the low. Let's see if it has some retracement. So it looks like it's retracing a bit. It goes a bit lower, boom, it goes right down. And here we could get some nice opportunities because there's some fair value gaps here that need to be filled, and we have some range to actually enter a trade. So let's see if we actually get into it. Basically this is the last round number 2, so 1 2 3. We are basically looking to enter a buy just here. So it just came near there, but it hasn't actually gone through. This one didn't go through either, and there we go. This would enter the trade. So just now let's enter our buy position just here, place the order, and let's see how it performs. So there it is, it's going in drawdown, perhaps, well, there it's going, perfect. Let's just go directly to the order close, and perfect. There we have another nice trade closed, and as you can see, this time it dipped quite below this low, but it doesn't mean it's actually bad, okay? It can happen. Obviously, we must take in consideration that is if it's being done from some type of heavy news, okay, and it may be whacked down instead of the actually 50 pips or 40 pips I did here, whack down 100 pips or something like that, we could expect some consolidation, and maybe then it's not the best option to enter. So obviously we'll have to evaluate this every single day depending on the news that we can find out. But as you can see, the strategy is really simple, and if you have any questions, please drop them back down in the comments and let's see the results of this backtest. And now we finished. It took me about 2 months to finish it. And obviously, as you can see here, the result isn't 3,200. And obviously this has an explanation, and I'll tell you in a minute. If we come to the analytics to see how this strategy actually performed, you can see that basically we have the same risk reward, average profit and average loss of 1 to 1. Okay, so basically we're seeking for 20 pips in an uptrend and 20 pips in a downtrend, depending on the circumstances of the trade. So our profit factor standard at 2.87, and we ended up with a 77% win rate. Okay, this was all based on 30 trades. Obviously, don't take this grounded. You need to do your own backtest. You need to do 500 or 1,000 trades to validate every single strategy before you actually enter the real market. And as you can see, it performed quite well. And if we see by sessions, we can see that the best sessions were the New York session and obviously the European session. The Asian session, in case some trade had the rollover because it didn't have enough volatility to actually finish off in take profit or stop loss, then obviously it closed in negative. So we know that maybe taking the trades to the Asian session is not the best idea. But in any case, it performed quite well. But obviously I wanted to see if I could get some better results out of the strategy, because I think it has a nice potential. So basically what I did is I came to the analytics inside, but the strategy is so good that honestly we only had 3 points to improve. So I came down to the exit optimizer, and the exit optimizer is a really good tool, especially to find the best stop loss and take profit, because it runs thousands of backtests for you seeking for this best combination of stop loss and take profit. And guess what? It found the best stop loss was 22 pips, so just 2 pips below this round number to avoid getting wicked out or getting stop loss by the spread. But the take profit, guess what? It takes it up to 42 pips, so it takes this to a risk reward of 1 to 2. And this actually makes quite a lot of sense. And a max holding duration of 2 hours and 51 minutes. So basically it's saying that it's going to give me risk reward of 1 to 2 with a 66% win rate. And obviously we'll remember this is an estimate, but let's see how this actually performs. So basically the change that we're going to do now is that when we get a trade, we are going to seek for a risk reward of 1 to 2. and we're going to have a max holding duration of 2 hours and 30 minutes, more or less. And obviously while I was developing this strategy, I thought this would be quite interesting. So obviously let's see the results. So now we got both back to this side by side. You can see that this is the original and this is a new one with 2 hours and 30 minutes of the average duration. And you can see actually we have some points to improve now, like try avoiding trading during major news. And obviously this is based on that now I have the double off take profit. So obviously we can see that on news events, having this double take profit maybe isn't so good. So obviously a nice thing that we can tick on here. And if we come down below, we can see that the exit optimizer gives me another optimization, but obviously we must be careful with overfitting our strategy. So I only recommend using the exit optimizer once and then testing it in a nice forward test to see if it matches in the future and not only in the actual tested range. So obviously we won't touch this again because we've already got a nice setup. And if we come to the equity chart, we can see a nice improvement here, and obviously it looks more like a risk reward of 1 to 2 equity chart because we have some dips, but obviously they recover really fast when we get some winning streaks. If we compare it to the last one, this one obviously looks a bit more smoother, but this one only made a 13 to 14%, and this one lifted up to a 32%. So we've made more than double in the same amount of trades, okay? Because basically we have 30 trades on this side and we have 30 trades on this side. So obviously it's a major improvement. Our drawdown sits at a 5%, and honestly a 5% drawdown, if we've actually made a 32% profit, is nothing, okay? Our profit factor dropped just a little bit because our win rate dropped to a 57% from a 77%. So obviously it depends on your trading style. If you prefer to have a risk reward of 1 to 2, you can use one strategy. If you want a risk reward of 1 to 1 because your personality goes with winning more trades, okay, having a higher win rate, then you can go with the 1 to 1. Both options are excellent. So for me, it's been an excellent exercise. I really enjoyed this strategy. It's really simple to use, really mechanical rules that we just follow every single day and just wait for our setup to happen, reacting to the price and not trying to predict it. And this for me is the key to be profitable in the markets. It's knowing to react to our setups instead of trying to predict what the price is actually going to do. So I really hope you've enjoyed this video. I hope you've learned something extra. Don't forget the discount coupon that you got right down in the description. My name is Jack, and I'll see you next time.